Yeah, morning traders. So one interesting factor is we've got Japan coming back online after their holiday. We'll see if there's any kind of influence on the JGB market and the yen in effect. But our opening call for the Nikkei at the moment is the cash market is expected to unwind about 80 basis points lower when that resumes a little bit later on. We do have the ASX expected to open about 0.3% lower, and China looking pretty flat at the moment, although we are seeing it pretty close to the bottom end of their trading range, and people have been selling into rallies there. Into the session ahead, in terms of event risk, which we need to navigate, we've got the RBA minutes coming through. I don't expect that to be too much of a volatility event for the Aussie dollar, which you can see on the daily chart is finding good sellers into 64.50. That seems to be the sort of line in the sand where we're finding supply. We've got the EU CPI numbers coming through later on the session. They are a final revision. So we probably won't, in theory, we might not see changes to the current numbers, which are at 5.3% for both headline and core. We've got US housing starts and building permits. And then probably one of the more interesting ones for me is the Canadian CPI numbers. Now, headlines expected to jump up from 3.3 to 3.8% and core to move to 3.7%. Now, where this gets interesting is because if we have a look at the October Bank of Canada pricing in swaps, we've got 7 basis points of tights being priced in. So there's a 27% chance of a rate hike. In December, we can see about 15 basis points. So there, December is very much a live meeting. We get a hot CPI number there. If we get above 4%, then I think, those swap prices could price in somewhere around a 40% chance for that October meeting. And after an extended pause from the Bank of Canada, we could see a live meeting coming in. Obviously, that CAD yen's been a really good grind higher. It's been a good trade to be in. CAD Swiss has also been another one that's worked quite well, and that's looking pretty good on the daily and the weekly chart there as well. Now, in terms of the leads, what we've seen in FX markets, the dollar's down very small. So obviously, we're coming off the back of 9 weeks in a row. So it shouldn't surprise, obviously, some positioning into the Fed meeting later on this week. But on the session, the Danish krone has worked quite well. The Swedish has done quite well. The stocky there looking quite good. Euro dollars moved up from around 106.60 into 107 in the figure. That was helped by a Reuters article suggesting that banks could be asked to pay or hold more reserves against customer deposits. They're currently around 1%. They could be asked to hold 3 to 4% of those reserves with the ECB not getting paid on that. Now, if we call into question the PEP reinvestments, which people are expected to hear more about in the October meeting, and also an article in the Financial Times which came out over the weekend about hawks on the ECB suggesting that December is a live meeting. It's not a surprise that we are seeing European banks under a bit of pressure as well. The European Bank Index down 1.9%. Obviously, that was weighed by what we saw from SocGen. SocGen was down 12%. They came out with a strategic review, which the market's clearly disappointed with. In the US, we've seen the S&P down 0.1%. They got up to 44.66, but sort of tailed off into the close there. 46% of stocks were higher. So sort of a mixed breadth situation. We saw energy really at the top of the pile once again with a moving crude up 1.7%, again closing at 92.35 in WTI front month there. We've got the tech doing quite well. The Nasdaq's up 20 basis points. But interestingly, at the bottom of the pile, you can see the Russell 2000 down 70 basis points, and the KRE ETF is down 1.9%. That looks technically pretty poor and arguing for a move down into about sort of $40 in the short term. Another interesting one is that we have seen SOFR rates for Z3, Z4 moving to 75 basis points. I think the market may be preparing itself for a slight move up in the dot plot projections for 2024. And in fixed income more broadly, not really much of a change playing through. We've got twos up a couple of basis points. So we'll see how Asia trades today. We've got our eyes up firmly on that Canadian CPI one there.